Imagine turning a modest $10,000 investment into a life-changing $1 million. It sounds like a fantasy, doesn't it? But what if I told you that this dream is not just for the elite on Wall Street, but for everyday people like you and me? It might seem impossible, a dream reserved for Wall Street moguls, not everyday people. However, the truth is, with the right approach and mindset, this goal is entirely achievable. But what if we told you there's a proven path, inspired by the Oracle of Omaha himself, Warren Buffett? Buffett's journey from a young boy with a paper route to one of the wealthiest individuals in the world is a testament to the power of smart investing. His investing wisdom, rooted in simplicity and discipline, can help anyone grow their wealth over time. Buffett emphasizes the importance of understanding what you invest in, and not just following the crowd. You don't need to be a financial expert or have a huge sum to start. In fact, Buffett himself started with small investments and grew them over time through careful planning and patience. Buffett's approach is about making smart, consistent choices and letting the power of compounding work its magic. Compounding is the process where your investment earnings generate their own earnings, creating a snowball effect of growth. This essay will break down Buffett's strategy, showing you how to transform $10,000 into $1 million. We'll cover the key principles that Buffett follows, such as investing in what you know and focusing on long-term gains rather than short-term profits. We'll explore the core principles, provide practical steps, and even delve into the math behind it all. Understanding the numbers is crucial, but so is having the right mindset and patience to see your investments grow. This isn't about get-rich-quick schemes or risky bets. Buffett's strategy is about making informed decisions and avoiding unnecessary risks. It's about being cautious and thoughtful with your investments. It's about building a solid financial future through patience, consistency, and a long-term perspective. By following Buffett's advice, you can create a stable and prosperous financial future for yourself and your family. This is the Warren Buffett way, and it's within your reach. With dedication and the right approach, you too can achieve financial success and turn your modest investments into substantial wealth. You know, Warren Buffett often calls compounding the eighth wonder of the world. It's a simple idea, but it packs a punch in the investing world. This principle has been the backbone of Buffett's strategy for years, helping him build one of the biggest fortunes ever. So, what exactly is compounding, and why is it such a game changer? To get it, we need to break down how it works and why it can totally transform your financial future. Think of compounding like a snowball rolling down a hill. It starts small but picks up more snow and gets bigger as it goes. In the financial world, this is how compounding works. When you reinvest your earnings, they start earning too, creating a cycle of growth. This reinvestment is key because it lets your initial investment grow faster, like a plant thriving in the right conditions. Picture this, you invest $100 and get a 10% return. So you end up with $110 after a year. Seems small, right? But here's where the magic of compounding kicks in. Instead of spending that $10 profit, you reinvest it. Now, your new principal is $110. The next year, you're earning 10% on $110, not just the original 100. It might seem like a tiny difference, but over time, it really adds up. This process repeats year after year, with your earnings building on themselves. Each reinvestment cycle adds another layer of growth, like how layers of paint can turn a blank canvas into a masterpiece. Over time, even small amounts can grow a lot. The trick is patience and consistency, letting the compounding effect work its magic over the long haul. Buffett knows that time is an investor's best friend when it comes to compounding. He always stresses the importance of starting early and staying invested because the benefits of compounding get bigger over time. The longer your money is invested, the more it can multiply. That's why Buffett pushes for a long-term approach, focusing on gradually building wealth rather than chasing quick gains. He encourages investors to ignore short-term market ups and downs and keep their eyes on the bigger picture. By doing this, you let the power of compounding really take effect, leading to significant growth over time. Turning $10,000 into $1 million might seem like a daunting task, but Buffett's strategy makes it achievable. Warren Buffett, one of the most successful investors of all time, has shared his wisdom on how to grow wealth steadily and securely. His approach is not about quick wins or high-risk gambles, but about consistent, disciplined investing over the long term. Here's a simple 3-step blueprint that anyone can follow to potentially turn a modest investment into a substantial nest egg over time. First, invest in low-cost index funds. Instead of trying to pick individual stocks, Buffett recommends investing in low-cost index funds that track the broader market. These funds offer diversification, spreading your risk across hundreds or even thousands of companies. This means that even if some companies perform poorly, others may perform well, balancing out your overall returns. Second, reinvest your dividends. Dividends are payments made by companies to their shareholders, typically on a quarterly basis. By reinvesting these dividends, you're essentially buying more shares, accelerating the compounding effect. This reinvestment strategy can significantly boost your returns over time, as the dividends themselves start to generate additional income. Third, let time do the work. The key to Buffett's approach is patience. Don't expect overnight riches. Instead, allow your investments to grow steadily over decades. The power of compounding means that your returns will start to generate their own returns, creating a snowball effect that can lead to substantial growth over the long term. Let's say you earn an average annual return of 7%, the historical average for the S&P 500. In approximately 47 years, your $10,000 investment could grow to $1 million. This might seem like a long time, but the earlier you start, the more time your money has to grow. This simple yet powerful strategy, when combined with discipline and a long-term mindset, can put you on the path to financial success. Remember, the journey to $1 million is not a sprint, but a marathon. Stay the course, keep investing, and let the power of compounding work its magic. With patience and persistence, financial success is within your reach. Section 4. Patience pays, weathering the storms in the market. The stock market is like a roller coaster with its ups and downs. It's easy to get caught up in the excitement of a bull market or panic during a downturn. However, Buffett's philosophy stresses the importance of staying calm and riding out the market's volatility. The stock market is a device for transferring money from the impatient to the patient, Buffett famously said. He understands that short-term market fluctuations are inevitable. Instead of trying to time the market, he advocates for a buy-and-hold strategy, remaining invested for the long haul. Remember, when the market dips, it doesn't mean your investment is gone. It simply means prices are temporarily lower, presenting a potential buying opportunity. By staying invested and continuing to invest regularly, you're essentially buying low and selling high over the long term. Section 5. The Math of Millions. Seeing is believing. Let's break down the math behind turning $10,000 into $1 million. Assuming an average annual return of 7%, here's how your investment could grow over time. 10 years, $19,671, 20 years, $38,696, 30 years, $76,122, 40 years, $150,073, and finally, 47 years, approximately $1 million. As you can see, the power of compounding truly kicks in over the long term. While the early years might show modest growth, the returns accelerate significantly as time goes on. Remember, this is just an example. Your actual returns may vary depending on factors such as market conditions and your investment choices. However, the principle remains the same. Consistent investing, combined with time and the power of compounding, can lead to significant wealth creation. Section 6. Bonus boosters, fueling your journey to $1 million. While the core principles of Buffett's strategy are straightforward, there are a few bonus tips that can help you accelerate your journey to $1 million. First, add more money regularly. Even small, consistent additions to your investments can make a big difference over time. Consider setting up automatic contributions to your investment account, even if it's just a small amount from each paycheck. Second, start early and stay invested. The earlier you start investing, the more time your money has to grow. Even if you're starting small, the magic of compounding will work in your favor. And remember, it's crucial to stay invested, even during market downturns. By incorporating these bonus tips, you can supercharge your investment journey and potentially reach your financial goals even faster. Section 7. The Buffett Way, Your Path to Financial Freedom. Warren Buffett's $10,000 to $1 million investment strategy is not a get-rich-quick scheme. It's a long-term approach that requires patience, discipline, and a belief in the power of compounding. By following his simple yet profound principles, you can transform your financial future, one smart investment at a time. Remember to invest in low-cost index funds, reinvest your dividends consistently, and let time work its magic. Don't be swayed by short-term market fluctuations. Instead, focus on the long-term goal of building wealth steadily and securely. Start today, and let the Buffett way guide you towards financial freedom.